Eric Muathe, Muathe.com, with weekend market analysis for the weekend of January 28th and 29th, 2017. Let's take a look at markets with about 2 hours to go. Pretty much, let's call it an unchanged day as far as the major averages are concerned. Maybe the biggest mover can be here, which is crude oil, down about 1.7%. Let's take a look at those charts. In this video, I'm going to take a look at US markets, take a look at commodities, take a look at some stock picks, and also take a look at some bearish ideas that I might consider. Those are going to be part of the subscriber part 2. Otherwise, let's take a look at markets here. And as we all know, the major averages are trading at all-time highs. And more importantly, we are looking at the NASDAQ doing its best to break out above what has been a resistance line on the weekly. You can see that it is doing its best to move above that resistance. The more it stays above that line, the more the market is going to continue higher. At the same time, if we drop back below that blue line, then that's also going to be trying to tell us that the market is running out of momentum. So staying above that line is what the bulls want to see. Otherwise, those who are bearish and have bearish positions would like the market to stall even as it tries to move above this line of topside resistance on the NASDAQ weekly chart. Keep in mind, if we take a look at the NASDAQ after this week's move, the NASDAQ is showing that it cleared the daily resistance levels. There was a resistance level here on the daily that was becoming a problem, but the market did clear and stay above that this past week. So that's exactly what the bulls wanted to see, a move above that resistance line. We see that the NASDAQ still continues to trade above 69.1. As long as markets are holding above that threshold of 69.1, expect markets to be stable to outright bullish. If we take a look at the Dow has been holding above that threshold for the most part since about late November. Holding above 69.1 has suggested to us that the market will have strength. And we are looking at the Dow this past week breaking out, obviously. And the Dow needs to stay above the previous weekly closing high. The level to watch there is 19,963.80. As long as the Dow is holding above that number, that's a good looking breakout. And if it stalls and trades below that price range, then we can start asking questions about the market. But for now, since it's above that number, we have to respect the potential for increased highs. In any market environment, you're going to find challenges. Take a look at the Dow. We had an improvement this past week to all-time highs, but take a look at the technicals. The Dow failed to make a higher high on the RSI, and that negative divergence sets the stage for some type of a pullback. We don't know what kind of a pullback or the magnitude or the duration a pullback might take, but this negative divergence look starts bringing that into the possibility of what could be expected next. But keep in mind, we have a very strong monthly chart on the Dow. As long as the Dow is holding above 69.1, we've been saying you have to assume that the market is sideways at worst, bullish and very bullish at best, as long as the market is holding above 69.1 on the monthly for the Dow, which is the case right now. And also, with the move this past week, the S&P 500 was breaking out. And so, just like we discussed for the Dow, after a nice couple of weeks, 2 weeks rest period, the market is now beginning a fresh leg. And we can see here, S&P 500 needs to stay above 2276.98 to convince bulls that it still has legs and intentions of moving higher. So that's good. Otherwise, failure to hold above that number might be a problem for bulls. If we take a look at a 3-year weekly chart for the S&P 500, just like the NASDAQ, it is doing its best to hold above this topside resistance line. As long as it is above that line, we have to assume this market has intentions of moving higher. If the market stalls around here, then that's going to be confirmation of running out of momentum. But right now the market is closing the week, or about to close the week, with this look, which is encouraging for those who want to see the market moving higher. Just like for the Dow, S&P 500 also recorded an improvement in highs on a day-to-day basis, but the RSI did not make a higher high. And again, that negative divergence sets the stage for some type of a pullback. It could be a major high, maybe not. But all depends here on how much of a pullback we might get. But for sure, we are starting to see here that the market wants to pull back. It might be a shallow pullback and a bounce, or a deep pullback and a major bear market. We don't know. We need more information. And of course, as long as the monthly charts continue to be strong, we cannot call this market ready to drop. S&P 500 as of right now is doing its best to recapture the level above 69.1. So far this month, it's been unable to. So as we go into the new month, if it does show reversal and rejection at this number, that by itself is going to be a bearish sign. So holding above 69.1 is critical if this market is to see higher prices. Failure and rejection at this level generally tends to be a reason for markets to pull back. And so we can see that as we go into the new month of February, early next week, the question is going to be whether we can hold above 69.1 on the S&P 500, or whether we turn down for the month of February and we begin a drop. So that's something to look forward to, or to at least consider. The new month might bring with its own energies, which might actually not favor the market if the market is unable to move above 69.1 as we start the new month. Now that concludes the free portion of this video. The rest of the video is going to be for subscribers. For the rest of you guys, enjoy your weekend. Eric Muathe with Muathe.com. Let's continue on here and take a look at stock picks and take a look at commodities and see what we have.